All right, good morning, trade pros. Welcome to the morning market update for Wednesday. It is now April the 10th of 2019. This is George Papsov, Trade Pro Academy. Thank you for joining us here today. We have a really good and full update for you. There's a lot of news today. Monday and Tuesday was slow. We said Wednesday is going to be the super day of the week, and here it is. All right, it is Wednesday, and there's a ton of news to comb through. First, let's start with a morning market fun fact. And I call this I have my own bias of behavioral finance. I call this the they must know more than me about my money syndrome. And this is very interesting because as traders or as investors early on in our career, as we hit the life cycle where we have some assets that accumulate that we could invest, we think that somebody knows better what to do with the money that we've made. All right. And this is a really cool morning market fun fact. On this day in 2000, Jeffrey M. Applegate, the chief U.S. investment strategist at Lehman Brothers. Who's that? What? Who's Lehman Brothers? Never heard of them. They no longer exist. They went bankrupt. Recommended that his clients have at least 60% of their portfolio in technology stocks. 60%, 60, all clients. All right, which was nearly twice the market average. And over the next year, we know what happened. Tech stocks lost half their value and earnings literally disappeared overnight in technology companies. So that was a sign. That's a cautionary tale that you care about your money the most and you should manage it. Today we had some big announcements and big events. First, out of the European Central Bank, the ECB, they had their latest equivalent meeting to what the Federal Reserve does, and they announced their policy statement and their latest interest rate decisions. The last meeting was in March 7th, all right, and the expectation at that point was that they would start to look to increase interest rates June to September. Unfortunately, Mario Draghi at that time said we're going to leave rates low until all of 2019, which was a dovish take, which means it's more accommodative of markets. All right, and he also surprised the market with a TLTRO announcement, which basically means banks are able to loan money for longer periods of time at lower interest rates. Again, more accommodative of the market. Today, he was expected to say not much. All right. In fact, one of the headlines I read was pretty funny. This is on the Zero Hedge blog. They're always kind of, you got to take all their writings with a grain of salt, but their charting is amazing. They said, Mario Draghi explains how doing nothing for the rest of the year will save Europe. I love it. I think that's a pretty funny quote. Anyways, back to the update. So today what he said was that he left the 7-day main refi rate unchanged at 0% as expected, maintains forward guidance on rates, meaning there was no real change in line with expectations. He did put out a statement, interest rates to remain at their present levels at least through the end of 2019. And here's where it got dovish. Dovish meaning that more accommodative, lower rates for longer for the market. He said, and as long as necessary to ensure sustained convergence of inflation towards target. All right. So he's told you what he's looking for. He wants to see inflation hit their annual target. And as long as it's not happening, he's going to stay dovish. Well, it's interesting because in his press conference, he said that he expects inflation to decline in recent months, right, to support the narrative that he's going to hold rates low until the end of 2019. All right, I think that the European Union and the European Central Bank primarily was getting ready for liftoff, meaning to start raising rates. And then the market crash happened. Then the Fed went dovish. And now they're just maintaining their dovish stance. They didn't budge throughout that whole thing. All right. He said more details coming up on the TLTRO financing upcoming in the next few meetings. I think the market expected something here today, given that he said he announced it last month, and he wasn't prepared to give any additional information on what that would look like, the structure of the TLTROs. And so he basically just decided to say nothing. All right. He didn't even say which meeting, in fact. He did say this, though, risks remain to the downside, reiterated a more accommodative tone of the market. And the euro on that news initially spiked to 112.57 and then, spiked above the resistance, then dropped to 112.57, and 112.40 is the key support structure below between the S1 and S2 pivots. And if we look at where it is right now, this euro, I'm going to just turn around, key it in. Guess what? The 112 even got traded, and so that is a new low on the euro, and that came in on hold on, that's not correct. Give me 1 second. I was looking at a daily chart. Yeah, we went below that 12.55. We're now trading 112.41. There could be some support here. There's a lot of reasons to see a support level on this chart. Also the S2 level. That's the European Union, all right? Negative for the euro. The dollar's catching a slight bid against the euro, but all in all, this is negative total impact for the European currency. We also saw this morning another data point that's important to the Federal Reserve this time, the March U.S. inflation data. All right. Oh, by the way, Mario Draghi is still handling questions in the press conference. So if you hear something in the background, that's the Trade the News service squawking what he's saying. I don't like to listen to what he's saying because it's usually delayed. I just like to follow the news feed. All right. March inflation data, the headline came in with expectations. We're expecting 0.4% of the U.S. CPI basket, which measures and tracks inflation in the United States. We got 0.4%, so in line with expectation. But when you remove food and energy costs, all right, the price actually dropped. We know the energy market's been up quite a bit in the last, in fact, all of 2019 so far. And we know that food prices have increased a significant amount. They always do. And so when you remove those two volatile aspects, the actual ex-food and energy index dropped to 0.1%, very close to no inflation at all, versus 0.2. All right, but year over year, it ticked up to 1.9% as a total. All right, so what you're seeing here is a slightly lower inflation data point, which supports the Federal Reserve's move and initiative to hold rates lower for longer. That's what we got so far. So we have inflation coming out of the U.S. We also have the ECB. Now let's talk about markets as a whole. In Asia, Japan's down 0.5%, Hong Kong's down 1/10, China's up 1/10, India's down 1%. In Europe, at midday, London's up 1/10, Paris is up 0.4, Frankfurt's up 0.4%, and in the United States, the Dow, the S&P, and Nasdaq are holding to small gains of 0.2%. We are above the previous day's close and below the overnight high. We're sort of in the middle of the range, which leads us to believe we can see a little bit more of a consolidation today. All right. Crude oil is up 0.7%, and it is currently, after the pit open, went up to 64.54, which is an overnight high. Pit open down at the 29. The prior day's high is 64.45. It's a little bit of resistance, but crude is making gains and holding on to them. All right. In relation to crude, OPEC came out with their monthly report today, and they cut 2019 global oil demand from 1.24 million to 1.21 million barrels. It's not a lot, and it's still a decrease in demand overall. They cut their output as well. They said that there's a much tighter oil market as production plunges, mainly due to the fact that Venezuela's oil output dropped by 289,000 barrels per day to 732,000. They were above 1 million. Now they're dropping down to 739. Venezuela's got a situation going on. It's impacting their ability to export crude. All right. Also, March oil production is at 30.02 million, which is down from 30.55 million. So all in all, there's lower demand in crude according to OPEC, but there's also lower production, and that should balance itself out to pretty much be an in line with expectation report. No real big news here other than the Venezuela situation. All right, Bitcoin's up 0.7% to 52.29. The 10-year yield is flat at 2.5%. This morning, we've already seen a lot of news. At 10 a.m., we have Atlanta Fed's business inflation expectations, top of the hour. Then at the bottom of the hour in 10 a.m., at 10:30, we have the crude oil inventories report. Yesterday, we had a huge mixed report in crude oil, and the market didn't really know where it wanted to go. We had a big draw in gasoline and a big build in crude, and that sort of created a little bit of kerfuffle and sideways price action. In today's report, if we confirm the indecision, it might be a little bit more of a dud. There will be opportunity and volatility, and sometimes, depending on how these numbers come out, it's a great opportunity. Other times, it's just a meh opportunity, but it's an opportunity nonetheless. Crude oil is one of those days where in 1 hour of one day, you could make your whole weekly salary, no matter what kind of job you got, because there's a lot of volatility, and it tends to be predictable, opportunistic volatility. All right, so it's going to be interesting. That's at 10:30. We trade that live in our room every single week, and we do damn well at it, if I might say. All right. After 10:30, you have Randall Quarles speaking at 11:50. 1 p.m. results of a 24 billion 10-year note auction. All right, 2 p.m. we have FOMC meeting minutes. All right, this is the meeting minutes from the last session with the Federal Reserve. Interesting things to watch for is the balance sheet that paused their balance sheet normalization or selling assets off their balance sheet. They're looking to pause that down until September. All right, look at any kind of reasoning behind why they chose to slow down interest rates and what the future outlook is. And also we're looking to see all in all what the outlook on the economy is. Because the Federal Reserve moves with their monetary policy, they should be according to inflation and jobs. And we've seen jobs growth and inflation slow down a little bit this morning. So a little bit of a mixed message. So we're comparing what happened today and where we are at this point to the meeting minutes of the past, trying to recognize what that means for their future policy decisions. All right, so there's a lot here at play today. It's going to be a super busy day. 2 p.m. you got FOMC meeting minutes. And because at 2 p.m. we have FOMC meeting minutes, I think this morning's a little bit slower in equities. Right, we're in a range. So at this point, look to buy the bottom of the range, sell the top until you see the trend change and get more trendy. If there is a lack of trend, a range is an amazing opportunity as well. All right, that's what I got for you guys today. I hope you guys have a phenomenal rest of your day. Thank you for being here with us every single morning. I really appreciate you. I love doing these video updates for you, and they're, an awesome start to my morning. So I appreciate you guys. Have a great trading day. Manage your risk and trade like a trade pro. Watch that euro. Watch Apple. It's a little bit strong this morning, and expect slower markets with lower volatility. Follow the 3 rules. Number 1, trade less frequently, so less trades as a total today until the market starts to move. You don't want to have 100 trades and it hasn't gone anywhere, because when it does go somewhere, those 100 trades could have deteriorated your confidence and you don't do anything about it. All right, so it's more important to be patient and look for the right trade than being in a trade just for the sake of being in a trade. All right, so number 1, less frequency. Number 2, less size on your contracts. Number 3, take quicker profit, and you'll have the foundation for a great day. Take care. Have yourself an awesome rest of your session. Appreciate you guys. I send you love, joy, and happiness. I'll see you tomorrow. Over and out. Trade pros in the room. Let's get started here. I'm going to map out some levels for you on the S&P 500. Then we'll send it over to our oil desk to cover oil, and then I'll look at NASDAQ and Dow with you briefly before the opening bell. All right, we got a great day ahead of us. Let me get started with the S&P 500 and outline some support and resistance levels we can buy and sell off of.